Hello, everyone, and welcome back to TradeFinder Live. It's great to be back with you all during this trading week and trading day. I'll be introducing Rob Roy here in just a few moments, but first and foremost, we have to cover our disclosure disclaimer agreement. We have to cover this for all of our live webinars and events, so perhaps you may have seen this before. Main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. Please feel free to take a screenshot. That's the main thing to take away. It's the first day of the trading month. We have a holiday shortened week from Labor Day yesterday, and the market's looking towards the jobs report on Friday. So very interested to hear what Rob has to say about all that. And of course, very excited to interact with you all. So at this moment in time, I'll introduce the man of the hour, Mr. Rob Roy.
Good afternoon, Zach. Hey, everyone. Welcome to TradeFinder Live. I hope everybody enjoyed a long holiday weekend. And as you mentioned, Zach, holiday shortened weeks are always interesting to see how things play out, getting off to a rather thud on the beginning with the markets down. But as you also mentioned, we are going to be focusing on the jobs report. That's the first economic report of the month, and they'll all be heavily watched because now we're getting into September, which is where we're expecting that first Fed rate cut. Pretty much everybody, I think, agrees that it's going to be 25 basis points. There was some commentary on the financial networks this morning that if they did go 50, that we might get a rally. I would be surprised if they do 50, but maybe they will. Still kind of feel like they're going to be moving rather slowly, especially until after the election. And then if they want to speed things up, they can. But once again, that's just my personal speculation, and we'll wait and see what the Fed actually does. All right, taking a look at the chart, you can see, as I mentioned, that we are down today on the S&P, actually breaking below the 10-day moving average for the first time in 4 trading sessions here. If we close here, but we've got a little ways to go between now and when the market closes, and perhaps we get a little late rally and move back to the upside. But you can see this resistance line from the previous wave 5 high back in July. We kind of tested that up around August, tested it again towards the very end of August, and haven't been able to break above it just yet. And I still think we have a little bit of a potential buy the rumor, sell the news on the rate cut, as now September seemed a ways away before, but now we're almost there. And without being able to break above this wave 5 high, we'll see how the market reacts to it. Maybe the Fed does surprise with 50 basis points, but we look like we might be kind of rolling over here a little bit, not to mention history and the fact that over the last 10 years, September has been the worst performing month. Not usually as bad in an election year, but we showed the data over the past couple of weeks on how September and October tend to be a bit of a churn sideways into an election. They were even talking about on the financial networks. You heard me say this, the market doesn't like uncertainty, and that's what we have going into this election, not just with the presidency, but with Congress as well. So the market will adjust no matter who wins, no matter who controls things, and we'll feel better once there is some certainty, regardless of the party that wins. And as I said, the market will just adjust accordingly. So the key today will be, do we close below the 10-day moving average? And then you know what comes next. Do we have a follow-through or confirmation day tomorrow? And close below the 10-day moving average once again. That's going to be the key to see if this wave 5 is indeed complete. If it is, then we have to start looking at some more significant move to the downside. Since the wave 5 did not go above 100%, if that wave 5 is over and we roll over and start to correct, then the move should be back down towards the previous 4. So that brings us all the way down to in the 500 area. So that would be a big move lower. But let's not jump the gun. Wait and see what happens today. And if we close below the 10-day moving average, if there's follow through tomorrow, maybe we get one more big run into the rate cut. That wouldn't surprise me either. We've been solidly in this tap box. So basically the wave 5 is gone where the algorithm says it should go. And y'all familiar with the software now, but if you're newer and haven't gotten a copy of it, go to hub.com, HUBB.com. Free Elliott wave charts. You can become a founders member and get the AI signals if you'd like. I believe there's a couple more spots left, but there's a limited number, and that's not BS. There's a limited number. The data scientists don't want, pardon me, everybody on the planet having the AI signals. So you can actually take part of that if you choose. All right, so let's move on and look at the Dow. That actually was our case study consideration for last week. We had it going up to 424 and moving back today, but at least for now, holding on the low, the 10-day moving average. So you can see the symmetrical triangle. We broke above this resistance area at 410 that we had back from mid-July and then towards the end of July, breaking above it in mid-August, and so far held above it. So a test of the 10-day moving average, completely normal, and we'll see if that holds, and we can turn and go back to the upside, unlike the S&P. And we talked about this last week, market rotation going on, different markets participating now, a wave 3 for the Dow, where we're in a wave 5 for the S&P. So this looks like where money is rotating into on the Dow, and can we hold 410? Even if we give up the 10-day moving average, can we hold this 410 level? If not, then you have to look at perhaps the breakout is false and doesn't proceed as it should. Let's go back and look at interest rates. We'll look at both TNX and TLT. You guys always ask about TLT, so I'm just kind of clothing that in. You see a little bit of a tick up in rates as there's a bid in bonds today. You would expect with the equities market down that bonds are higher, and they are. I do think that this is a decent sign. I know as it sounds counterintuitive to have interest rates going up and feeling good about it, but I made the comment that if rates go down too far, that means the economic data is really bad, and the Fed is going to have to be more aggressive on the rate cuts. And so rate hikes or rate cuts don't immediately affect the economy. It takes time to work through. So if we have that weak of an economy and the Fed has to be more aggressive and really cut rates significantly, that means the economy is bad and will take time to get turned back around, even with a bunch of rate cuts. So a little bit of a tick up out of this triangle, I think, is actually a constructive thing. Obviously depends on what part of the market you're in. If you're in the tech sector, you're probably not too excited about it. But other than that, for the market in general, I think it's pretty healthy, and not much going on the longer end, as you can see on TLT here, just kind of flat. And so we'll have to wait and see if we get some follow through on the breakout in pricing. Remember, on TLT, it's pricing. On TNX, it's yields. Prices and yields move in inverse proportion. I'm sure you're aware of that by now. And so we'll watch the longer end of the curve as if we start to move up in rates on the shorter end and not on the longer end, then we're inverting the yield curve again, or making it even worse. And that's not good either. So that could be a negative on rates ticking up. So there would be a bearish argument or a negative argument on the markets with the shorter end of the curve moving up. All right, so taking a look at the dollar and see how it's acting, and it held at that 161.8% level. It continues to. So I like that. I feel that's more constructive for everything, basically, because we want the globe to still have confidence in the dollar and still be buying the dollar, especially with all the debt that we've discussed numerous times that we have in the U.S. So we do need, we don't want it too strong. We need a Goldilocks, right? Don't want it too weak, don't want it too strong, just staying in the middle and holding this 161.8% extension level, I think, was key. So just a really nice zigzag to the downside here on the dollar, came down to the 100% extension, followed all the Elliott wave corrective pattern rules here, break back up to the previous fib level before going to an extended level. That's what's supposed to happen, and this was just textbook, really, on an extended zigzag pattern on the dollar. So just going into a range, I think would be great. We stay between 101 and 103. I mean, market doesn't give you what you want very often. So just can throw a wish out there and see. But I think a churning sideways consolidation in the dollar would be the best scenario. The VIX is actually moving today. We are breaking back above that 17.5 level we had mentioned last week after the yen Monday stuff that occurred. We came back into that range between 12.5 and 17.5. We tested it a couple times in August, and here to start off September, we are breaking above that 17.5 level. So is this the start of something? We'll see if the VIX can close above 17.5, just as we're going to see if the S&P closes below the 10-day moving average. So a lot of eyes on what happens at the close and then what happens tomorrow to see if there's follow through. So lots going on there. Get back to some of the other markets. We'll look at the Qs now, and you can see that we are continuing in this zigzag to the downside pattern. I know some people have thought there's no way the Qs go all the way down here to this 100% extension, but it's a pretty well-formed zigzag to the downside, albeit just barely, because the B wave stopped just at that last fib level, 78% fib level, before the zigzag would have been disqualified, but it held, and so far we've rolled over. Now today, the key, and we talked about this at the in the U.S. market update over the weekend. If you haven't seen that, you can go to the Elliott Wave Options channel on YouTube and watch it. Whether or not we could hold the 10-day, the 50-day moving average on the Qs. And so far today, we're breaking below it. So that was a key. So if we break below the 50-day moving average, and then again, the same rule, is there a follow through, a confirmation day, and we continue down in this C wave, breaking below this level right around here at 460, I think would be significant on the Qs. And then I would think that there's a pretty good likelihood we see this C wave extend on the Qs as money will be leaving the tech sector. That would coincide if rates continue to move to the upside. That would give further ammunition here. Let's take a look at volume. We are near the end of the day, so still more time for bigger volume to come in. But you can see a couple decent volume bars there on the downside to end the week. Friday was okay, even though up day less volume than the previous two selling days, and now we're selling again today. So look, it was just, it can't make up its mind here between up and down days recently. But look to see where the volume ends the day if we do indeed close below that 50-day moving average. So again, look for follow through or break below 460 tomorrow. I know that's not a popular trade. People don't really want to be shorting the Qs, but that could be a trade that's setting up and looking pretty well if things continue. Then the IWM, we take a look here, and we had seen some rotation into the Russell as well, getting hit a bit today. You can see we had this vertical move down, and that was yen Monday, and then kind of rallied back up, filled both those gaps, and now we're heading back down. We're below the 10-day moving average right now, so we'll see if that holds into the close as well. We still have the 50-day moving average and a little bit of support at 210. You know, that was resistance forever. So there are some points of resistance here on the IWM. The AI was liking the Russell 1000 on the value side, so taking the top tier, top half of the Russell, but then looking at not necessarily the highest beta stuff, but more on the value side as a place that money was rotating into. So it seems like the Dow, the Russell value, money looking into sectors where they can find a little bit more conservative trades. Hate to use the word safe, but safer. More defensive is really the best way to put it if we are going to have a bit of a correction here in the market. So let's look at the crypto world, and then we'll go to the metals. Bitcoin, we've got this big triangle, and boy, as hard as it is to believe, it is trying to sneak out of the bottom side of that big triangle, and that would bring us down. It's a pretty good sized triangle, almost 20,000 dollars worth here on Bitcoin. So that would bring us below 50,000 if this breakout continues. Now it's more of a sneak than a clean breakout here, so you have to be on alert for this perhaps being a false breakout, and we could still turn and move back to the upside. But if this gathers steam, considering that's a decently formed triangle, we could be looking at a lot lower prices on Bitcoin. And then Ethereum, it's really working on holding that 2,500 level, just kind of staying right there as it consolidates in this triangle. Kind of an odd pattern here. Had a little small triangle. We had an upside break attempt, came back down just like Bitcoin did. And then we've consolidated from here. But it's kind of a weird type of a triangle if you were to grow these lines out and move those lines out, because basically it's kind of shallow there for a real significant triangle. And then to take this into account, you'd have to tilt that line up and move this one down and to reform the triangle, which it does look like it's doing with this consolidation, is it's just forming a larger consolidation. It's taking some of the aesthetics away from a really classic look on the triangle formation, but I don't think anyone can argue that it's definitely consolidation. Maybe just not the best triangle look. Let's look at the metals, also struggling today. We talked about this in the U.S. market update over the weekend as well. What a really odd pattern. Now, GLD is famous over the years for creating triangles and breakouts. It does it a lot. Consolidates, breaks out, consolidates, and breaks out. But this one's kind of odd, where you have this symmetrical triangle, and we broke out. Another symmetrical triangle, broke out, this time an ascending triangle. And it looks like we're trying to sneak to the downside out of it. And one day doesn't mean anything. But if we do break lower, that kind of going to go along with rates moving back to the upside. So there's some concerns here. So caution is still warranted. I've been sounding that for a couple months now. As you know, you trade what the charts give you. You don't try to guess. You don't try to trade on what you think the market's going to happen or what's going to do. You just trade on what the market actually gives you. And looking towards rate cuts, you would think would be supportive of the metals. So are the metals trying to tell us that the Fed is going to be too slow? That could be part of what's going on here with gold. And then if the economy gets really bad, well, that probably brings a bid back to gold, because that's usually where things run when things get real bad. But we're not there yet. We'll see. And we'll just look to see if, because you can see we're bang near the high of the day on the bar, although still down on the day. And then taking a look at SLV, that's a good reminder there that just because it's an ascending triangle doesn't mean it's an upside breakout. You've heard me say that in ad nauseum as well. And then rough day for silver as well. Just boom, gapping down below the 50-day moving average after we had the 10, 30, and 50 all converging at the exact same spot there on Friday, and now moving lower. And talked about this, even though the GLD had the ascending triangle, and with rates moving down, you would think that that could be a good sign for the metals. But on silver, we had this 61.8% fib level, the strongest of all fib levels, in my opinion. So I always watch that and give credence to it. And boy, it looks like perhaps we're going to come down here and hit that wave 5 target price on SLV, perhaps even a little bit oversold short term here with the gap down today, a little separation in the 10-day moving average. So maybe a little backing and filling, but unless we can get back above that 50-day moving average rather quickly and within the next couple of trading days, I'm talking about specifically this week for sure, we could be looking at that move all the way down to that wave 5 target. So a little ominous there, I think, in the metals as far as what should be happening with rate cuts. Now, if we take a look at UNG, some of you mentioned that made comments on the U.S. market update. I left out UNG. We cover everything every week, and tried to do a little rotation, add some other things in. And you can see we're getting a little bid here. So we're trying to hold this wave 3 low on UNG. So far, everything has been just absolutely spot on. Mono wave 3, as you've heard me talk about, on the way down, broke that support at 15, went back up and tested it. And now we're coming down, and we said, well, the algorithm is not sure that wave 4 is over. It's still green. Had we broken below the wave 3, then we would have turned that, or the algorithm, we don't do it, the algorithm does it, would have turned that 4 purple, meaning that 4 was done, and we would have labeled a 5. But we haven't broken that wave 3 low yet, and catching a bid today in UNG, maybe we make another run up here to 15, and if we can take out this 4 and move it, I've noted that that wave 4 was only a 30% corrective move to the upside. It kind of had that resistance at 15, so maybe it makes another run at it, and maybe we could catch some sort of a bid in natural gas as we move into the winter months after all. But just one day doesn't mean anything. For this to be a meaningful bounce, it's got to get back above the 50-day moving average, back above 15, and above that wave 4. So there's some work to do to the upside on UNG, but it bears watching at least some sort of a bid today, which is nice. And we haven't seen that much lately. All right, so looking at some of the other stocks of interest, here's that IWD. I was going to show you that. This is what I was talking about with the Russell. You can see a dramatically different chart from the Russell 2000 index or ETF. This is the 1000 and on the value side. So the larger half of the Russell and less beta here. And that seems to be holding in there pretty well. So that's what the AI identified. And I think that's something that we can look at as a potential place if rotation continues that way. Just a little surprised the Dow is down as far as it is today, since those were kind of both in the same boat. But this is the one that AI identified multiple different symbols for the Russell 1000 value. There's not a whole lot of option liquidity in any of those symbols, but certainly you can see the chart looks pretty solid. And then taking a look at our other case study consideration that we did last week on KeyCorp, KEY, went up to 18. So we've just kind of held in there from last week, consolidating, holding a 10-day moving average. So I don't see any reason to do anything there. Run back to again real quick, just as a reminder, 424 was the target. So we started up and holding the 10-day moving average even on the selling today. I don't see any reason to do anything different with that either. So we'll kind of hang in there with those two as we move forward. And then here's one I wanted to look at. This has obviously been performing really well. This is going to be our case study consideration for today on the XLF. We're a little bit overbought short term, but this is where some other rotation is. And the caution is going to be here. We'll put this one on a tight leash due to the fact that if interest rates do start to tick up, then that takes away from the whole idea that financials tend to do better when rates tick down. So if that is going to happen, then this may run out of steam. It is just a touch overbought short term, so keep that in mind. But that's a really nice breakout above the resistance area here. And we do have a decent looking DMI, although we're getting a little bit of rollover in the positive directional indicator today. But as I've noted in the past, that doesn't bother me when we have the negative not ticking up. So this just means perhaps the buyers are stepping away just a little bit today with a bad tape, as they call it, but there's no real sellers stepping in here either. The ADX moving up nicely. It hasn't reached 40 yet, so it does seem like there's more room to the upside here on the XLF. So that's why that'll be our case study. And then we'll keep an eye on the DMI. We'll keep an eye on rates, and we'll see how this performs all in all. But at this point in time, it just seems like this is one of the sectors that money is rotating into. And so we'll keep an eye on that. Insurance is another area that does well when rates are moving to the downside, and seems to be performing pretty well also. So maybe some insurance stocks. We had one CB that we had an alert on for our alert subscribers at evotrader.com, and we took it off today. You can see it hit the target, hit the extension on the zigzag. And so that was one that took its time. Had to be a little patient on it, but eventually found its footing and went up and it hit its target. So nice one there. But that's an example of you can look at insurance financials. That's where the action is right now. There's a little bit of a bid on SMCI, but Zach, just to give you a heads up, XLF will be what we're going to use for our case study for today. And then I'll look at SMCI. They came out with some news and kind of stopping the downward momentum a little bit, but it's off the highs here. And so wave 3 to the downside. I don't look at the DMI as much on downward trends, as many of you know, because things tend to go down so fast. And the ADX, at least, is a bit of a lagging indicator. The two directional indicators quite responsive to day-to-day movements in the market, but not the ADX. So I'll go ahead and take that off. I do like to look at the CCI. I think that's takes up where the ADX leaves off, because it's very responsive day-to-day. And it is coming off a pretty good low, a bit of an extreme point low, if you will, where it was testing that low back from towards the end of August. So we touched that and we're moving back to the upside, and we'll see if we can turn and roll back up and maybe get some sort of a move like we did right here out of SMCI. Doesn't seem like it's going to be anything of real significance on the move to the upside, especially with what's going on in the rest of the market, bond market, etc. But maybe we get a little bit of a bounce back up, at least to 500, back to the 10-day moving average. So maybe a little more follow through short term, but I wouldn't think that there's a whole lot going on here with SMCI. Just perhaps a little bit more of a short term bounce, if anything, and then we'll watch the CCI and see if it can break. It's got to get back above zero before it becomes meaningful. And do something like it did here in mid-August. If so, then maybe the rally can be a little bit longer. But at this point, just a further bounce back up towards 500, towards the 10-day moving average, and filling this gap would be what I think is going on. So there was news on SMCI today, so I just thought I'd bring that chart up. And so with that, Zach, I'll just open it up to some questions. I'm sure there's lots of stocks that the folks want to look at, and then we'll bring you in to show them how to go through and post that idea on the XLF.
Sounds like a plan. Yeah, let's get into some good questions we have outstanding in the chat here. We'll start out with one from Steve, and that's going to be on PLTR, specifically puts on PLTR.
Oh, puts. All right. So going the other way that we usually hear about. But they hit the magic words a while back and mentioned AI and all that, and had a big run. They've broken out of this range around 30. We're trading right through the 10-day moving average. And I think if it breaks 30, I love the idea of your puts because you can see we gapped up here back around 25 and just ran straight up, and there was nothing really, any point of resistance on the way up, which means if we break down below 30, there won't be any point of support on the way back down. However, I would want to make sure it doesn't hold this level at 30 here, because that was resistance that it broke from mid-July. It's come up, it's back. It tested it once here towards the end of August, and so far that's held. So I think I would be a little more cautious here. If you wanted to be really aggressive and you believe in the trade, and you want to do just go ahead and put the puts on, then your stop would be up here in this area around where the previous wave 3 is, and I can give you the price there. Go over and put the crosshairs on. So yeah, if it broke above 32 and 3/4 there, I think that would be your stop, because then likely that support area at 30 is holding and it can move higher. So if you wanted to kind of get in there quick and do it now, that's your stop. Or the more conservative, and I usually try to give both an aggressive and conservative response. We all have different risk management. We all know what our risk tolerances are personally. And so from a conservative standpoint, you would want to see it break 30 first and then get in. And then I think you got to move probably all the way back down to 25, and it could be rather quickly if that were to play out. So yeah, that's the thoughts there. The CCI is kind of rolling over here. So broken below 100, heading down towards 0. If that breaks the 0 line and starts moving down towards negative 100, that's probably your signal that if it hasn't already, that it likely is going to break below 30. So I think you're on one there. Just depends on how aggressive you want to be at this point in time. But a break of 30, I think, is pretty good confirmation that you're on the right track with the puts.
Very well. Thanks, Rob. Next up, we're going to go over to IRV85 for AMD.
That's good. We haven't looked at AMD in a bit, so let's take a look and see how it's doing. Probably not so well, considering the semi's not having a very good day today. And there you go. Movement to the downside there. Also a huge, if I condense the chart up here, huge zigzag pattern to the downside. And the difference between this one is look where that B wave is, right at 50%. So this is a huge downward zigzag. All kind of complex stuff going on, even though that was a mono wave A down. But then this consolidation here in the B wave, and then another zigzag. So we have clearly a complex C wave to the downside. And pardon me, I'm not sure if you were looking long or short on AMD or just curious for a read, but there we have, and look at that, right at the 61.8% fib level again. And check out where these 200% extensions are. They're on top of each other. So the big zigzags, 100% extension is at $100, and the complex C waves, 100% extension, $100. So I think that going to be progressing lower on AMD. We seem to be breaking down today with that movement. You'd have to give it some time. It looks like it's going to take through the end of the year. So this may not be any sort of a real quick move, more of a drift to the downside here on AMD, but it does look like we're heading lower on AMD. The one thing that could hold is when it gets down here to 125, it does seem destined to test that A wave low there from early August. So if it can hold there and bounce, perhaps it can disqualify this, but it's got a lot of work to do to disqualify both of these downward zigzags. It can get rid of the complex one with a move back, above about 160, but it's got to go all the way up here above 180 to get rid of the big one. So looks a little ominous there on AMD at the moment. If you want to know what would change that scenario, one was holding 125, the other would be taking out this B wave. If it takes that out, then at least you're getting rid of the shorter term zigzag, and that's going to be right around $162. So AMD to be looked at from a bullish standpoint at all has to get above $162. So, yikes!
Thanks, Rob. Yes,
Kind of a
indeed.
different
We're going
tone
to go.
here to all the stuff going to the upside usually.
Yeah, that's a fact. Yeah, it'll be interesting to see, to use one of your words. We're going to go over to Juan Rowe here for OCGN.
OCGN. I think a good one to look at. Somebody had asked about this on the U.S. market update too on Lilly, so we'll bring that up. Well, this is just kind of it's a penny stock basically trading at $1, hanging on by the skin of his teeth from moving to the pink sheets. But the key here is, can it hold this 120 level, $1.25? If it can hold that, maybe it gets another one of these bounces up towards $2. Looked like it was going to do that back about a week ago, but then succumbing with pretty much everything high beta today, at least so far, to the downside. We want to know where that closes. And if it closes below this $1.25, does it have follow through tomorrow? If so, then we could be heading back down towards $1 here on this. So the key is it just has to hold above that $1.25. If it can get back above there, maybe it can make this run, but it just seems like the market is changing. So, yeah, we'll have to wait and see. But that's your key, the $1.25 level. If it closes below it today and looks weak again tomorrow, you're probably going to see $1. And then the question will be, can it hold there? Because going back to the beginning of the year, it was trading down around 50 cents, and then ran up and consolidated a bit at $1. So if it closes below that level and shows any weakness tomorrow, I think high likelihood you'll see $1, and then can it hold there? But if it can get back above 125 somehow, either by the end of the close today or tomorrow, then we could fend off that move. But that seems the more likely move at this point, based on how the market's trading this time. So let's look at Lilly and jump in on you here real quick, Zach, because this is kind of one of those areas that I'm talking about as far as defensive-minded sector, healthcare, obviously, and you can see not having a great day today, but certainly not trading with the rest of the market at this point in time. And Lilly's really interesting because if it can bounce to the upside off of this 950 level, 960 call it, it could easily see 1,000 relatively quickly. The 10-day moving average was tested at the end of last week twice, and we seem to be holding back up there. That's another one of those stocks that's showing a bid in it. So market rotation, just keep a close eye on that 960 level there, 950, 960, see if it can hold in this area above the 10-day moving average. So didn't mean to interrupt you there, Zach, just thought somebody asked a good question about that in the market update, so I wanted to bring it up.
No worries at all. Yeah, that's valuable context to add. So we will next go over to a question from Lisa here on INTC.
Intel, it's just a rough day for all of these stocks. Just when it looked like Intel was going to try to catch a bid and move up off of the doldrums here, then it gets hit with this stuff today, and right back down we go towards the 20 level. So song remains the same here. You Led Zeppelin, it's going to be, can it hold the $20 level? If it can hold it and try to bounce again, because most certainly there's going to be no follow through from the bounce up on Friday with today's move. And then what you're really looking for, I think if you want to go long Intel, just exercise a little patience and let it get above 22.5. If it can get above 22.5, well, then you've got a pretty good trade here. it could go up anywhere. I don't know that it's going to run all the way up and fill this gap up at 30, but it'll have clean air, no resistance at all, and perhaps it bounces up to the 50-day moving average. So I think I would just wait and watch this, see if it can hold 20, and if it can, get back above 22.5, and then I think you have a pretty easy trade up to the 50-day moving average. But it's got to do both of those first. It's got to hold 20, and it's got to get above this 22.5 level. So I would just be watching this. It could stay range bound here. I just feel like institutions, obviously very heavily institutionally owned stock, would like to step in if it looks like it tries to break 20. Seems like they'd come in and buy it a little bit, but you never know. And with this big gap down, just going through sideways is kind of common, as most of you know. And then we'll see if it continues to hold in here in this trading range. But seems range bound between 20 and 22.5.
Thanks, Rob. You must be psychic in addition to being a professional trader, because one of the symbols was LLY and the second symbol was ORLY.
It's going to be a good in the automotive sector, where AutoZone seems to be just owning the sector. Advanced Auto Parts had a rough earnings report. O'Reilly so far hanging in there pretty well, just consolidating the heck out of this move right here around the 1100 level to break to the upside, which is possible here. It has to get above 1150. So if it can break above 1150, then we might be off and running there with O'Reilly. That would be the highs from March. And then we tested it again towards the end of July, and we've just hung in there at this level. So let's see if the DMI is still constructive, and the CCI looks like it's trying to turn back up. So we can watch O'Reilly and see, and does it follow the path of AutoZone, or does it follow the path of Advanced Auto Parts? That's going to be the interesting thing to see, because there's a good trade there either way it breaks. If it breaks down, then you probably get a move all the way back down to 1,000, and you could trade that move. If it breaks to the upside, who knows where it goes, because then it's going to be in that clean air again, and no resistance. So it could take off and run. So I'd keep a close eye on O'Reilly and see what it does, because I do think there's a trade there, just depending on which side of that 1150 level we eventually break.
Thanks, Rob. Next up, let's go over to TT for David.
Train Technologies. TTD is Trade Desk. Yep, not having a good day, but it's not alone today, as you've seen on the charts. Breaking down below the 10-day moving average, the 350 level is really key here. It needs to hold that. I think we talked about this before. That's the key level. If it doesn't, then it probably quickly comes down here to 325, and has an awful lot of support there. So it could hold there pretty easily, but it's only one day. Remember, today doesn't mean anything. I know if you own the stock or you're long options or calls or whatever, it doesn't feel good today. But just one day is not that meaningful. It has to have a follow through or confirmation day. But if it does, then I think you see 325 rather quickly. So where this one closes today is going to be very key. Can it close above 350? That's going to be what you're watching for in the last hour or two of trading today.
Very well. Next up, we're going to go over to Angry Sushi for BAC.
Well, BAC could be okay. Bank of America, it's in the area catching a bid, so it might make you less angry. Moving to the upside here, a nice cross there between the 10 and the 30-day moving average, also crossing above the 50-day moving average at 40. And seems like, again, this is where the action is. This is why we're looking at the XLF to include all this kind of stuff rather than picking an individual bank stock. But that's a good looking chart right there. We'll see if the ADX can start to show that it has some strength. So far, it hasn't, which is a little bit concerning. If it's going to continue up to the upside, that ADX has to get in gear and start to turn with it. And we're kind of just at the upper end of the plus 100 range on the CCI. We'll see if that continues to move higher, which would be supportive. And let's look at the CMF here. Money flow is constructive. So with the CMF, remember you look for convergence, divergence, and it does show that there is solid money flow into Bank of America. Now let's get the DMI to show a little more strength to it. So yeah, I think you're on a good one there, up to that wave 5 high from mid-July. And then it may bump into some resistance. Your stop is pretty close by. So this is a pretty good trade from a reward to risk standpoint, because as long as it stays above 40, I think you're long. If it breaks below 40, then maybe you get out and wait and pause, because if it breaks below 40, it's probably breaking below all these major moving averages that it just broke above. So that would be a completely different story. But I'd be long Bank of America as long as it's above 40. That's the summary.
Well, here's one we haven't looked at in a while. Lisa would like to look at NIO. NIO.
Wow, it is one we haven't looked at in a long time. And, it just seems like other companies over in China have garnered all the recent EV attention, but it's trying to catch a little bit of a bid here. It's got some work to do. Let's see exactly where that level is. I would just watch it, but if it can get above this 430 level here, then we could probably come up here towards 480 or so. And if by chance we could break above 5, we could really be off and running, but that's a long ways away. First step, I would watch this move. It's consolidated. It's getting above the 10-day moving average, but it's bumping its head on the 50-day moving average on Friday and today. But if it can break above the 50-day moving average and break above 430, then I think you have a good trade there, at least short term. So I'd keep an eye on that one. I wouldn't do anything yet, but I'd be watching that one closely. So yeah, we haven't looked at that one in a while, but pretty interesting looking chart.
I could not agree more. And let's go back over to NVIDIA, see what's going on there.
Yeah, I figured that one was going to come up. I almost did that one on my own ahead of time, and I figured somebody would ask about it. And not well received on a pretty decent earnings report. But as we talked about, it needed to blow the earnings away. This was asked numerous times in the different webinars on how to play the earnings here. And talked about how 7.8% price movement was priced in. It moves on average 8%. And then it has a pretty good volatility crush in the options after earnings. So the better move is let it go ahead and have its earnings report and then trade it. And if you bought puts after the earnings, then they're performing well today. If you bought puts before earnings, you needed to get out on earnings day while the volatility was still in there before they crushed it out. But purchasing them on Friday might have been okay. But moving down here with the ugliness today, it looks like NVIDIA is coming back to 100. And I talked about that before. If it broke 120, it was likely coming down to 100. And some people told me I was crazy, but just reading the charts, it's not a personal view. Now, at this point in time, with the move down today, it almost looks a little bit oversold short term. So we've gapped down today, gapped down on the open. Now we're trading right now at the low of the day. And so maybe we get a little bit of a bounce, but if we get a little bit of a bounce up, I think that's an entry to trade it on down to 100. It may not, it may go straight down, but it is at this moment right now that we're looking at it, just a touch oversold, considering it's at the low of the day today. It's, you look at it and no, they didn't blow away earnings, but it was a good earnings report. No way around it. But this shows you the changing tide in the market right now. I think that's what's really going on. There's rotation. People wanted any excuse to take their profits in NVIDIA, and just the fact that they had a good, solid earnings report that wasn't blowout seems to be enough for people to take some of their profits, because that's what's going on here with NVIDIA. So see if it bounces up in the next day or two. The ideal scenario would be a bounce back up here to the 50-day moving average, and then you've got a good short entry. It'd be hard to buy puts right now because they probably put the volatility back in the puts now with this down day today. So, yeah, keep an eye on that.
Thanks, Rob. How about we go over the metals, and then we'll head over to the platform, and I'll show everyone how to post that idea on XLF.
Okay, what do they want to see on the metals? I did show GLD and SP earlier.
Okay, well, perhaps we can just go back and catch the recording for that. Apologies. Doing a lot of multitasking per usual. So
we will totally understand.
No worries. All right, let's go ahead and just head over to the platform then. Sorry for the confusion out there. And I will go ahead and show everyone how to post this idea. So as you can see, I'm at the platform dashboard. This is what you will be redirected to upon logging in to the platform after entering your credentials. As you can see as well, I mentioned this, I think, on the last session, Rob, where we're not just giving away that AI access. Even the TradeFinder account here doesn't have it enabled. So definitely take advantage of that offer that Rob mentioned just a bit earlier. We're going to head over to show where to post the idea here. So as you saw, I clicked over all ideas. You can now see a feed, or log rather, of all of the ideas from our growing community. We'll go over to new idea here. And if you want to create an idea, which we're about to do, you will click this. But if you wanted to create a post, that would be essentially a draft idea, as if the criteria for your idea is not fully met yet. You're waiting on something to play out for that criteria to be met, and then you'll have that for reference to post the idea. So for today, this one is going to be on XLF. And I will just search the symbol here. As we can see, that came up right away. And our target price on that one was what again, Rob?
We're going to go up to 47.50. This is going to be the target.
47.50. Oh, decimal is important there, huh?
Yeah, a slight difference there.
And the time frame on that?
We'll give it the 3 months into the end of the year.
3 months, very well. So as you can see, we have that set or available here out of these set or fixed time frames. If you need to have something more specific, you can go down to the exact day that you're looking for. So we'll do 3 months, and this will be to be continued. So I'll go ahead and post this idea right now. That way you can start voting on it, interacting, commenting. We love to hear your feedback. And yeah, you'll see in real time all of the interaction as we continue throughout this trading day. So Rob, I'll pass back over to you to wrap up any thoughts before we head into the rest of the day.
Sounds good. Thanks, Zach. And yeah, we know you've got yeoman's work back there with all your multitasking. I was going to make a good joke about myself, but I'll let it go. I just want to thank everybody for spending some of your trading day with us. Again, hope you enjoyed a good long holiday weekend, and we want to see where the market's closed today. Are it change afoot, or is this just a little bit of a pullback? And we still have a little more to the upside to go, but it sure feels a little ominous on the fact that we're having a down day on the start of what has been the worst trading month of the year over the past 10 years. So where do we close today? Do we get follow through tomorrow? That's what we'll be watching. Hope you have a great rest of your day. Thanks again. Look forward to talking again soon. Take care, everybody.